the positive is that the domestic buying has been outpacing foreign selling for the last many days. And how? Yeah, even on Friday, if you look at the data, the DIIs bought 900 crores in the market and the FII sold 500 odd crores. And if you remember when we were doing closing bell, we did see a lot of banks rally. You saw delivery buying of 300 crores in Axis Bank. That's quite a bit. There was 250 crores of buying in Sun Pharma. There was a delivery buying of about 150 crores in SBI, ICICI Bank. So give and take everything, at least you can say with certainty that perhaps this, 7,800 level could be a support in the near term?
Well, actually, the person on your left is better placed to answer that, as well as the PSU Bank rally.
Yes.
I mean, I found that very skeptical. There is still a lot of bad news that can come out of those banks. So I'm not betting on that side, technically, how that looks at all. The two events that we have to prepare for are both quite unimportant, for the markets. I shouldn't be saying that credit policy is unimportant, but all I'm saying is largely factored in. The GDP numbers that will come out today are always lag data. Those numbers have not got a very great reputation after that change by the CSO. So it will be an also-ran number. It won't move the markets, the needle much. But credit policy, the expectation is ahead of an ECB and the much bigger Fed announcement. The governor is unlikely to move rates, especially because he already gave that big handout. And after that, we've got the seventh pay commission numbers, which can be a load on the fisc. So he's unlikely to move. But he can say things which can jitter the market for an hour, perhaps, or for a day. But it is unlikely that he will say anything that will be too jittery ahead of the Fed event. So I think the domestic events are going to be something which the market can factor in. But I don't know about the manner in which the Bank Nifty behaved on Friday, or for that matter, the PSU Bank Index. I couldn't see enough raw material for that move at all. So yeah, probably there's some technical factor there, Anuj.
Yes, Lata, morning. In fact, except for SBI, rest of all was speculative buying. SBI had delivery-based buying of 35%. I was looking at rest of the stocks. PNB, Bank of Baroda had 20%, 22%, and rest of the other stocks even lower. Some of the FNO stocks only 17% to 18%. But I think, I can stick my neck out on this, and I've done that in the past as well. This is a market in which rallies, when they happen, they look like really good. But the fact is that this is still a market which is a sell and rally market. It's given enough evidence over the last many months, and there's no reason to believe that's changed. For me, that will change if the Nifty goes past, say, 8,300, which was also the last peak, and also the 200-day moving average for the market. This market made a peak at 8,600, then 8,300. If it slips at any point below 8,300, till then that rally is only a short covering relief rally, whatever you may want to call it. Even now, the risk reward may not favor you, because the 50-day moving average of 8,000 and 8,000 is also, a logical or psychological mark. That should be the first resistance for the market. And then you have 8,150 as the 100-day moving average and 8,300 as a 200-day moving average. So market is in heavy, congestion zone at this point in time, this 300 point. This FI selling, you can really ignore, because you've seen volumes come down so significantly, and the DI buying, of course, I clearly take the point, 900 crores of DI buying. My biggest worry for this market from Friday's numbers was the FI buy number in index options, 2,700 crore. Most of that in index puts, because 3 puts were bought for every 1 call. Now, when the series starts, you normally tend to say, okay, the put option buying is because of portfolio hedging. But this is a market in which FIs are in any case selling in cash market. It's not a market in which you are aggressively long, so you want to hedge your portfolio. This is a market in which you're selling in cash market. At the same time, you're buying puts. Why would you do that? You would do that if you have a negative view on the market. My sense is that smart money believes that this market has one more downside left, and that could happen maybe once this whole noise on GST and all is over and the market does not have too many cues to deal with. That could happen. And the last point, this has been that kind of a year, where we've spoken about bottom-up stock picking. Look at this month also. Sensex is down 2%, mid-cap index is flat, and small-cap index is up 2%. So all through the year, we've seen that, and towards the end, it's telling you that that's going to continue, not just this month, but maybe even early next year as well.
Okay, fair enough. And to add to all of those cues,